Hey, this is Erica Hill West with Lending Path Mortgage, your mortgage go-to gal. I've been in the industry for over 10 years, and I also host a local radio show. In addition to that, I manage 5 loan officers. In case you were wondering where we're licensed in 11 states, and all that information is below. Today, we're going to talk about what are points on a mortgage. So you may have heard this. People have said it'll cost you 3 points, 4 points, 2 points, 1 point. You don't even know what that is. Here, today, we're going to find out what are points, how does it apply, what does it cost you, and when does it benefit you. So tune in. Today, we're going to talk about what are mortgage points, or what is a point on a mortgage? So, as you are searching for interest rates, trying to find out what the most competitive offer is out there, sometimes you may hear it's going to cost you half a point, 1 point, 4 points, 5 points. You may be asking yourself, what is a point? Well, I'm here to tell you what it is. A point is equivalent to 1% of whatever your loan amount is, not your sales price, your loan amount. So if you have a $300,000 loan amount, 1 point is $3,000. Now, keep in mind, you also need to do the math and figure out what the difference is in the rate at no points and 1 point. If there is a large enough gap, you also need to look at what the payment is, right? So if you have a interest rate that costs no points, that means you're not paying anything additional in order to obtain that interest rate, and your payment is $600. You look at what the interest rate is for 1 point, okay? And let's say the payment is $586. That's only $14 different a month for 1 percentage point. Now, in this figure, the loan amount may be $100, $120. So that's $1,200. The way for you to determine if there is a financial benefit for paying a point or paying any points is to divide the total cost of the point, the dollar amount of the point, by how much it's saving per month. So $1,200 divided by 14, you'll get that number. You divide it by 12. That figure is your break-even point, meaning you would have to stay in the house for that long of a time in order for you to break even. Break even. So when you're looking at points, the one thing you have to ask yourself is, how long do I plan to be in this house? If you don't know, I'm here to tell you that the average person stays in the same home between 5 to 7 years. 5 to 7 years. So there better be a pretty substantial difference between what you're saving in a monthly payment on a rate with no points and a rate with points in order for you to really have long-term savings while you're in the home. It's really, really important. The other reason why you need to know what points are, a lot of lenders sneak them in. They do. They really do. So this is your warning to beware. When they send you an estimated worksheet, or they may call it a loan estimate, you need to look for verbiage of points. Okay, they may call it an origination point. They may call it a discount point. Usually those fees are used to give you the rate that they're quoting you. Pretty sneaky, right? So if you're a consumer out there and you're shopping, the verbiage that you need to use when you're shopping for interest rates, this is it. What is your par rate? What is your par rate? Number one, they're going to be super impressed that you know that lingo. But number two, you're going to be able to get a picture of what the base rate is, charging you nothing extra. Okay? So when you go to shop for rates, you're going to ask, what is your par rate? The other thing I hate to tell you is that you may be one of those people that doesn't like to pick up the phone. I know tons of those people in my life. You want to do everything, text, email, online. I get it. It seems convenient. The problem is that you're only getting half the picture. So if you're used to getting on your computer and searching today's interest rates, a lot of times, if you're not reading the fine print, those interest rates that they are showing you include pretty hefty points. Pretty hefty points. So make sure if you're going to be a consumer that exclusively shops online, that you become educated and informed so that you know everybody's tricks. The other thing that you have to remember is although points are deductible on your taxes, here is a plug to talk to your local CPA. You need to make sure that there is large financial benefit. Large financial benefit. So typically, the lower amount that you finance, the less money it's going to cost to buy those points down. But likewise, the littler effect it's going to have in your payment. The higher amount you finance, the bigger change we're going to see in monthly payments. It's also going to cost you a lot. So next time you hear that term, what is a mortgage point? You're going to be able to tell everybody it's 1% of the loan amount, not the sales price, the loan amount. Your loan amount is calculated by your sales price minus your required down payment. Everybody should know what they're required to put down on their loan, so this should be a pretty easy calculation. If you are interested in finding out what par rates are and what rates with discount points are, please find my contact information below. Make sure that you like, subscribe, and comment any questions that you have so that we can discuss them and cover them in a next video. If you are in the mortgage industry and you'd like to become a part of a new dynamic team, please also reach out. Our information is below.